Hello again, this is Robert Schein, Managing Director and Partner with Blanke Schein Wealth Management. Well, today is Wednesday, May 13th. There's a lot of topics and headlines to get to. But again, first and foremost on our daily updates, our commitment here at Blanke Schein Wealth Management is to stay connected with our clients, friends and family. Yesterday we got a request of just about 10 additional names to put on our daily distribution list. So we appreciate that. We know that you're sharing and also passing this information along. And viewership is rising on a daily basis. So again, from all of us here, if you have any questions or want to do portfolio reviews, we're here for you. But thanks for watching. Second topic relates to phase 4. There's another round of support from fiscal policy. Again, Jerome Powell earlier, as I discussed, from monetary policy, the Federal Reserve is doing everything that they can to support and create a backstop for the U.S. economy to ultimately buy us time as we get through this and reopen the economy. But he also signaled another key component to this, in working hand in hand, would be fiscal stimulus or policy, which is goes right squarely to Congress. Congress is working on something, phase 4, if you will, and it's $3 trillion in the opening bid, I'm going to call it. Again, it's sausage making, horse trading, and it could be 4 trillion, it could be 2 trillion, who knows? But it's a topic that I think what Federal Reserve Chairman ultimately was stating is, in past crisis in sort of U.S. policy history, it's better to go big sooner than later and then ultimately pull it back if you don't need it. Again, that's why he's being measured as he releases his side of the stimulus or sort of support for monetary policy. But again, that's going to be a key topic to see. Congress is working away to creating a solution, ultimately to buy us time as we reopen the economy from a fiscal standpoint, from a financial standpoint. And finally, let's talk about the U.S. GDP. As I've talked about this, the U.S. economy, measured by the GDP, is about 19 trillion. Year 2019, if you will, if you look at our trailing 12. And then the amount of stimulus that's been passed by fiscal and monetary policy year to date is 6 trillion. Again, another few trillion Congress could look at, plus or minus. That could take us to 8 to 10 trillion, who knows? But it's a good 50%, maybe a quarter to 50% of our GDP that's going to be a backstop to the U.S. economy. That's where the markets are sort of hanging out in suspended animation as we create an opportunity for medical technology or breakthroughs, or sort of what the best case scenario going forward and how we reopen the economy. But what that ultimately says is that we've got so much stimulus in the economy that we are buying time. So the U.S. GDP, as I discussed before, about 19 trillion is our U.S. GDP prior to this pandemic of hitting the coronavirus. We've passed 6 trillion if you combine what the Congress has done as well as Federal Reserve and the Treasury all in right now, and they're looking for even more going forward. So that's buying time in our U.S. GDP. But what's interesting to take a look at, if you look at markets in the past, and obviously it doesn't predict where markets in the future because we've never been here before. So that's the disclaimer, if you will. But if you look at all the markets in the past, and as measured by the GDP and the S&P 500, markets bottom 4 months before GDP bottoms. So ultimately, what the markets are now hanging out, S&P 500, is a consolidating range, as I have discussed in previous daily updates. We believe the S&P 500 is in a trading range. Again, we stopped up to the 2950 range, 2990, if you will, but the market came back down last couple of days. So it's stuck in we believe, the 2900 range to about 2500 range, 2500 range. Key support going forward is 2725 and 2575 plus or minus. Again, this is technical research that really sort of sets a backdrop as to what we should be looking at in the days and weeks to come. We believe the market is consolidating and ultimately hanging out in this period of time, suspended animation, to see, what one thing, if there's a medical breakthrough, or if there's a different way of looking at it. A lot of economies around the world have had the coronavirus before us, and they're opening up and reopening. So their GDPs or their consumer price index, all of their economic indicators are heating up again. Now, of course, they're coming off of extremely low lows, if not, a flat line, because their economies were closed, much like ours has been and sort of is right now in the US. But as they're ahead of us by months, we're also looking at their and monitoring and measuring their economic data on a daily basis. And there is life. In fact, that's what the markets see outside the United States. Those countries, and there's probably 10 or 15 different ways of handling this, by country. Regardless, those countries that are ahead of us are all, economically speaking, crawling their way out of this. And so there is light at the end of the tunnel. And that's what the markets are seeing. But in the meantime, we're going to be in a trading range for the S&P 500 until we get sort of work our way through sort of any breakthroughs we see, or a country that comes up with the best way to reopen effectively. Again, here locally, we've got little states opening up independently. Even Georgia a couple of weeks ago opened up, and there hasn't been quite a spike in cases that has been predicted. So those are all little positive signs right now. But again, it's case by case, city by city, county by county, district by district, office by office. It's going to be a slow grind. That's where the Federal Reserve has sort of come to the rescue, as well as Congress is going to do their part in the weeks to come. So that's the update for today. Stay healthy, stay safe. Those are the three major key indicators that we're looking at as it relates to what the markets are seeing right now, and some updates for you. So thank you for watching today, and we'll see you again next time.